Good morning once again. This is Thursday. We're coming towards the end of the week. So I'm going to talk about maybe managing your P&Ls in a more kind of accountancy way, depending on where you are with your profits, where you are with your week, month, and all that good stuff, because I think a lot of people get very kind of zoomed into just a singular day, and what it tends to do is that it makes you focus too much on that just one day, and then you're not looking at it from a business perspective. So let's try and shift things into the real world once again. So one thing that is a good practice to have is that if you get to Thursday and you're already sitting up on the week, as you go towards the end of the week, the last thing that you want to be doing is sizing up into the end of the week, because the primary objective should be to keep those profits, right? So instead of sizing up, I would actually size down into the end of the week. Or not size up at all, just, stay where you are, but maybe lower the frequency of the trades that you're doing. So if you're normally doing, let's say, 5 trades per day, maybe consider stopping after 2 or 3. Okay, so that's one thing. Now, similarly, if you're looking at your monthly performance, as the month keeps going, obviously, you want to try and preserve those profits. So, you want to have a look at your stats, where you are, and then just decide how you're going to approach it from the risk management point of view to limit that downside. Because, downside risk protection is what it's all about. Now, we'll see whether we get some opportunities. I can see that some of the equities are selling off, and I have some value highs that I'm looking at primarily on DAX, but until we get DAX, we can actually talk maybe about ES or NQ. I think NQ probably looks a little bit better because the value area high is a bit closer. So let's do that, since so many of you trade NQ, and I've been kind of dipping into it recently myself, after a hiatus of 2 years from trading NQ for various reasons. But yeah, so let's have a look at the very large profiles, and for that I like to use the volume profile. Okay, supply and demand as well, but I like to combine the two. So rather than just looking at supply and demand, just going, well, that's where the sellers came from, we want to look at what the price did in the run-up to those potentially interesting areas. So what I'm doing here, I'm looking for overall volume on my Blatek MP indicator. And I always make a joke, it's not Michael Patak indicator, it is market profile indicator. But we call it Blatek MP. Okay, so here I'm going to change this to 3 weeks so that I can see exactly what we did. And I have the overall volume, just the volume, but I also want to see the value area from that very, very large time frame. So we're still in, some sort of a balance over the last 3 weeks. And I can see this little low volume node right sort of in the middle of where the price ran through. So we're going to see if the price maybe can get back down there. Maybe next week. It's probably not very possible for today, but knowing how crazy NQ is, we may get there tomorrow because it's just a monster. But yeah, so some caution obviously during the summertime is always prudent, because there could be that slowdown that we usually get that we didn't get this summer. But we could see some some signs that the price is not quite reaching the averages that we've seen over the last 3 weeks. But for now, we're having a very lively summer. This is not normal, right? We don't normally get moves that are just, going into these V-shaped reversals. And yes, we've had some geopolitical risks and events that were causing some weirdness. But good for us, right? So that means opportunities. Yesterday was probably a tough day for a lot of you on equities because it was a very sort of barcodey day, but with a massive, absolutely massive wick. We had a lot of algorithm activity yesterday during the CPI numbers, but also I was looking at it after that, and there were a few moments where the price moved so quickly. That's just not humans. So the velocity and the amount of price movement that you get when you're observing even just a regular chart, that can tell you whether it is some actual humans trading or whether it's just algorithms battling it out. Now, I don't like to get involved in that sort of price action, so for the most part, I will not be trading news or anything like that, and I never trade news. I trade the aftermath of news. Sometimes I might hold a position into like the inventories or something, but that's not nearly as crazy as CPI and PPI. And, I trade some other products that are not as sensitive to those releases. So that's something to keep in mind. So nothing else on this big volume profile. I just see that singular zone, which is actually, a pretty simplistic outlook, because there's not like a million of the low volume nodes. There's just like one really small one. And let's go down to a more granular outlook on the daily chart. Now, daily chart is definitely reaching a swing extreme from a bit of a speed bump that we had around about July the 29th. Let's say from 26th of July up until 30th of July. And then we had more sellers coming through after a failed attempt to go a little bit higher. Some people call this a dead cat bounce. I know that Dolby doesn't like that because he's got a little cat, and I can totally understand why. It is a horrible saying, isn't it? Dead cat bounce. Like what? Why? What? Right. So daily chart, we are sitting in a supply. I'm seeing the sell-off in equities for London. One thing that London can do on, like when you take a very large sample size, you're observing it over, let's say, the previous 5 years, day to day. What tends to happen when London moves is that sometimes it will go the opposite way to whatever the New York session did. And that's kind of what we're seeing this morning. So for that to make any sort of sense, we need some orientation levels as always. I like to use the value areas outer edges just from the regular trading hours. Just like copper and everything else, I am using the shortened London session to calculate my value areas. So that's from 8 a.m. my time. All the way to 2:30 p.m. So that's the first calculation that I do, and that's 70%. I know that some people have asked me what is the percentage that I take. It's just a standard 70%, and if you're being like super purist, it should be like, what is it, 67.8 or something. But just round it up, especially on NQ, it's just a few ticks difference. It really doesn't matter that much when you're moving like over 1,000 ticks per day. Right, so again, on the daily chart, pretty simple. We have high volume node. A lot of volume was transacted at this level. And for now, we're kind of having trouble breaking through all of those previous orders that created this footprint on the chart of these big sellers that stepped in. That's the whole point of supply and demand analysis. So many people, I think, misunderstand that supply and demand is the same as support resistance. They're not. They're slightly different. So when you're looking at supply and demand areas, you want probably about 6 different conditions to be satisfied before you would qualify that as any sort of an area that you might want to get involved in. Obviously, on the daily chart, some of these zones can be absolutely massive. So we won't be taking trade locations from them, but they're definitely good directional indicators. So what should happen around the zone, or at the very least, even if we go through it, these sort of areas tend to bring time and onto the expected moves of when things should happen. So when you run into these big areas, even if we end up going higher, it's going to take a little bit of time to battle through all of these orders, and probably quite a few tries, and then finally, you get there. Right, so let me just see what's going on here. Let's drop down to the 4-hour chart now. So just going granularly through that multi-time frame analysis. So again, swing extreme, pretty visible here. We have a low down at 173.43, and then a visible, obvious high that was created on the 1st of August at 197.17. And let's see if we can accept value, maybe, to reject this entire area. So that would be my first signal based on this multi-time frame analysis. Looking at this zone that I marked up on the very large volume profile, it is actually within the day's range. Like I never cease to be amazed at how some of the areas that look very far away on the weekly chart, they're just there. Now, if we do go into shorts today on equities, there is a high probability that we are going to get there. So where is this zone located? It's 188.54, and then all the way down to 187.92. Now, I have my average daily range, which is dynamically calculated in my case, that is sitting right around 188.14. What I've seen in the past couple of days is that we haven't been reaching those. Like we've been turning right above it or below it. And that can be a feature of the summertime, right? So not sure whether we're going to get there. So it's always good to have several orientation points. And in this case, we do have some 100 EMAs. Is it 100? I kind of keep flipping through some of these. No, it's a 21 EMA. Yeah, that's right, because I wanted to find something that is closer. And that is from yesterday's low. Right around the yesterday's low at 189.23, I have something called the fixed daily range calculation. Again, another orientation point, usually useful during the reduced movement when you're not expecting the full normal average session or daily range to happen. So that's sitting right at yesterday's low. That's a point of interest, right? Now on Topstep X, you can get, hold on, let me drag this over here. You can get your daily levels, right? So daily levels, if you go to indicators, here they are, Topstep daily levels. I'm going to change this to a time-based chart. And you should have some relevant areas that will be marked up pretty nicely on Topstep X. So here we go. Yesterday's low settlement. So let's remove some of these. Let's leave hoax levels, weekly kickoff high, because I quite like those, and settlement. All right, so you can see that we have that, is it yesterday's low? Hold on, let me see. Let me just, because I'm still getting used to Topstep X. Yeah, so they have it at 189.04, so that's probably quite similar. Let me just see. Yesterday's value area low. Okay. I might change the colors of these because with the lights, and I'm finding it very difficult to see anything. So let's do settlement as yellow because that used to be something on T4 that I'm used to. And then I'm just going to mark up yesterday's low as a red color. Where's red? Okay, and make it a bit thicker. I mean, it's so customizable. It's awesome. And then weekly kickoff high and low. We can also make that. Let's do like pink or something so that we can really see it. Dirty pink. There we go. Okay, so let's see what that does to the whole thing. So there's the settlement. All right, I see. So this is taking the London low. So I like to look at just the regular trading hours low. I'm not sure they have that. I didn't see it in the settings. No, so it was just a yesterday's low from the 24-hour. Now I wanted to see just the regular trading hours low, because I don't like mixing and matching data sets. So if we're trading for London, yeah, you might look at London low as well on a more granular level. So they don't have sessions yet. I might put in a request to actually have that, because that's a useful measure. You know, where did the yesterday's high and low happen? I also have those as a part of my market profile, because I do look at the ranges and stuff. All right, so let's go down to the granular level now, really kind of get into the day time frame, see exactly what Asia did, where Asia high, low, and midpoint are, and to see whether we can find some more orientation points so we can figure out and get a good understanding before we kind of plow into some positions. Right now, yesterday's London value high is giving me a bounce. So now that that's appeared on the chart, there's a couple of things I would like to see for longs and some things that I would like to see for shorts. So the first step would be to go back into the initial balance, which is pretty small today. Like this is only about 47 handles. So not super large, but you know, the candles are pretty big as well. So that means we have to work from a lower time frame. Whenever you have very big candles, it means that you are either working in and out of our session, and you need to adjust for the expectations, because working from a 15-minute chart and something, it's going to be like too big. The candles will be just too big. All right, so if for further shorts, I don't actually want to get involved in between this value high and initial balance low. Initial balance low is at 191.55. It's a nice round number, but if we get some follow through to the downside, we can potentially look for that value acceptance play to give us sort of a directional indicator. Again, it doesn't need to have, it doesn't need to be a trade location or an entry location, more to be more exact, but it can be used to figure out the direction of where the price should go and then how it should behave when it gets there. So I know that value high is a very high probability for reversals. And that's exactly what we're seeing here. But it's a small trade. You know, there's not enough space until my other area of resistance, if you want to call it that. So initial balance low is now a potential reversal area. But unless I'm looking at the value acceptance short, so going all the way down below 19128, this is not a good trade for me, because it doesn't have enough space for my trade to work out, right? And this is how I try to approach every single product that I'm looking at. Every time I want to get involved into a trade, I'm like, well, is this worth my time, or is this just going to be some kind of a nonsense, trade that I'm just doing because I'm bored? So I have some criteria that my trade setups have to fulfill before I get involved to kind of stay in my slightly longer D type trades. And the only thing here right now that will match the larger time frame picture would be a short, maybe from this initial balance low bounce. We also have overnight VWAP not too far away from there. And then what we could do, we could front run this trade with like one contract or a couple of micros, and then see if you get that follow through to the downside. And in that case, you will be using the special situation value acceptance where the 30-minute chart, 30-minute time frame closes below 19127, 128. And then you're just going to use that as orientation, right, to kind of keep the trade going. That's how I don't get lost in, the granular sort of 1 minute movement, because I always look at these sort of charts and I always have ways to figure out whether the price is reversing, bouncing, and, do we have some volume behind that? So that's always a good thing to have. All right, so let's maybe do, because I've been kind of, like I said, going back to a bit of NQ and stuff, especially during these slower times in some of the other products. Copper has moved overnight, so this is something that we've been seeing quite a lot. Like Asia does quite a lot of stuff, and then we get to London and everything sort of slows down for about like 4 or 5 hours, and then things kind of pick back up. So we'll see whether that's something of interest. Now, let's do copper just for posterity. Weekly chart on copper. Hitting an area of previous selling on a weekly chart. Daily chart, similar view. So we have some supplies around here. Keeps trying to go higher. But one thing that I'm looking at here is that we did reach average daily range high already. And we're having some sort of a reaction from it. So this could be a short. Looks like I'm going to be a bear today. Roar. All right, and let's do a little copper short then, while we wait for NQ to make up its mind. All right, so risking about 20 ticks here and aiming for the VWAP at 40710. For 60 ticks. So that's a pretty good risk reward, 3 to 1. I would be happy with 2 to 1 as well, because that's kind of my default thing. So let's see where that falls on this chart. 40710. Yeah, that might be overshooting it a bit. But, let's see what it does, because it is a big orientation point. Big supply, big intraday level, average daily range high. So if we do turn around, and this is again what London does, it kind of whatever Asia does. At times of good liquidity, London will do this fake out, where it sort of tries to go in the same direction, but then they reverse it at some point. And that leads to things like failed auction fades, but you do still need some sort of a good level to run a good reversal trade. Otherwise, it's just all based on nothing and wishful thinking. So we don't want that. Likewise, orientation points for me will be the full single print fade closeout, because we did leave some single prints to the upside. Hit those resistance areas. So now I want to see as the first sign of my orientation for this particular trade is that we failed the auction. Otherwise, there's no trade here. So I'm going to keep it real. And then once that's through, the next area of orientation would be London value high from yesterday, 408.16. If that continues into a neutral day, or like best case scenario, which might not be possible today, you go into the late value acceptance and then rotate all the way down to the average session low, which is located all the way down to 405.30. But again, my profit is well ahead of that around overnight session VWAP. So I will be out and happy by then. So we'll see. Tekka says, why do you tend to trade copper more than you do gold? Because gold moves the best during the New York session, during COMEX. It's been very quiet when I was looking at it a couple of weeks ago, and I just didn't like the way it was moving. Today that is continuing with the 37 session range, and look, overnight we didn't really do that much. It was very spiky, and this whole move for Asia is like barely 100 ticks. That's very slow. So initial balance size for gold for London is 24 ticks. And if you look at the way copper has moved for Asia, it's moved 81 handles. So double that because handles times 2, because that's how you come up with ticks. That's 160 ticks. Now that's acceptable, right? I'm looking for movement that has at least like 150 ticks in it for the session that I'm trading. Otherwise, what's going to happen? You're going to get stuck in trades that go nowhere. Like this is like gold is just barcoding. Why would I trade that? You have to decide. But let's actually break down what you need to see whenever you're trading. Let me have a slurp of coffee first to wake up. So if you're looking at a session to trade, the worst thing that you can do for yourself is to have a very tiny, tiny range that goes absolutely nowhere, and then you try to trade that. So you tell me, on a day when gold has 24 ticks for the initial balance, that's the open, right? The open should have some volume in it. It has no volume. It's nothing. It's like, it hasn't moved. I'm like, is my internet on? Is this on? And then, even if you were to take the idea that this is a range that we can maybe trade, how could you possibly trade this? What is your profit margin on a day when initial balance size is 24 ticks and we're coming into 2 hours of active London trading and we only have 37 ticks for the entire session? Now, this is all data that I'm taking from my Blatek DR down at the left little panel here. That's painful to trade, man. Like you need movement. You need a range. Like one of the reasons why I'm moving away from crude oil this year is not because I just don't like crude oil. I still love it, but it's been moving like 70 ticks, 80 ticks, when all of the last 11 years it's been moving 250 and 300 ticks. Like a slow time of the year would be 150. And at its worst. And we've had this entire year from February onwards where crude oil had like 97, 100, 105 as an average session range. It's like, why would I want to trade that? That's horrible. And this is even worse. Like we have a tiny initial balance, tiny session range at the time of day when we should be seeing a lot of movement, a lot of bounciness, but not a lot, but reasonable amount. So this is why I don't trade gold during London. This would be like one way to piss yourself off and just to set yourself up for a terrible, terrible day, because you'll be in a trade and you're like, great, it's moved 5 ticks, now it's back to my entry, it's moved 5 ticks, and now it stops me out, and now it goes back the other way. But all of it, like your maximum profit margin that you would have here would be, best case scenario, if you caught the very top of, like, this is so small, I can't even see it. So if you caught it, like, let's say, absolute ideal scenario, which is not realistic, okay? So let's say you caught the absolute high, and you go in at 24.95 with a short, and it immediately reverses without giving you any drawdown. What's your profit margin? Well, it's a neutral day type. We have extensions to both sides of that first hour trading range, aka the initial balance that is marked as a red box on my chart. So usually on a neutral day type, your highest probability target is the middle of that range. So I have a whole 16 ticks. So in order to make that work, I would have to use like four ticks for a stop loss. And on gold, if the overlap comes in and then your trade has done nothing, it's just going to run you over, right? So, you need some sort of a range. This is an out of market thing. This is called something that we call a random walk in coding, right? In kind of trading algorithms and all of that. It's called a random walk because this is overnight trading where somebody's let some of the algos kind of take over a little bit, but there's just not a lot of action. So you want to avoid markets that are doing that. One of the reasons why I moved away from Forex in 2012, even though I traded it for 5 years and I did extremely well on it. It was my first 6-figure account. And it just died a death. Like euro dollar went from, doing 150 ticks or pips on average down to like 43 and, 36. And it just carried on for an entire year. So we have to be a little bit mindful, use some critical thinking over what sort of a condition do we have. And do we even have any volumes? Like, is anyone trading gold? Because I don't think so. At least not yet. All right, so let's remove gold now, and let's go into the questions. You guys always have lovely, lovely questions. What are the volumes on copper? Okay, so let's see what sort of volumes we're working with. Oh, don't forget, crude oil is rolling. It should have rolled already, I think. Okay, volume. I just need to add my volumes indicator here, which should show me what sort of volumes we're working with. Does it show me that? Yeah, so volumes overnight in copper were, they weren't like smashing, but they were relatively decent. So this is just doing it by bar. So let's do it by maybe 4 hours. Let me also rise up my platform here so that it becomes visible. All right, so obviously we have the regular trading hours when everything is smashing. You can see that as, big spikes, and usually you trade about 15,000 contracts for this particular summertime trading. Now, London for now is only... Now I'm trying to see it, but unfortunately okay, so for now, in this first sort of 4 hours or 2 hours, we've done about 2,000 contracts in copper, right? And if I look at gold, now gold is a bigger market than copper, so just keep that in mind. So it might not be as simple as just looking at overall volumes, because obviously they will have sort of different size markets and all that. But yeah, I mean, yeah, so volumes for the same kind of candle, 3,875. So technically volume is bigger in gold, but it's not doing anything. So volumes are not always reflective of the ranges, because sometimes you can have a bunch of volume being traded and the price is just staying in range. In fact, that's how you come up with point of control, right? Point of control in market profile is not any kind of point of control where people take control of anything. It's literally the point of the profile where most volume transacted. And typically it's a middle of the middle. So it's like fair value of fair value. And it's a terrible place to do any trading. Because it's great as a target, because that's where it's going to end up. But it's terrible to actually initiate trades. So I don't like it. So technically, even though, you know, copper is trading at like 2,000 contracts in the last sort of, let's say, 2 hours. Gold has got a range, tiny range of nothing, basically, and copper has double the amount of that range. So in my head, volumes and ranges have to kind of correlate with each other, right? So if you have a lot of volume, you need to see some sort of a trend, right? That means, or some sort of decent range. If those two are not matching up, if you have some volume being traded but nothing is moving, that means you're in a distribution phase. You know, you have Wyckoff that has accumulation, distribution, depending on what the market did before. So if it fell, then it started to go sideways. That's called accumulation. And the expectancy is that after accumulation, on a lot of the times, statistically, you should have a reversal in the other direction, and vice versa is true. So if you had a move up, then the price starts to distribute, especially during the regular trading hours. That's more significant than distributing outside of the active hours. Then you should expect some sort of a reversal. And that's actually a really nice, simple way to just figure out whether the price is advancing or not. So accumulation, distribution. In my methodology, I renamed that because it's like accumulation, distribution, yeah, and I kept getting confused with which is which. So I decided to call it phase 1 and phase 3. And then in between, when the markets are either going up or down, we have phase 2 and 4. And in my head, that's like a lot easier to break down. So I can actually use a little mind map if I can drag a little, because I love doing mind maps. It's such a good visual way to explain to yourself what you need to have as a process in your mind. Let's just remove all of this. I should have, again, prepared this if I knew I was going to mention mind maps. Okay, so we're almost there. All right, so mind maps. Why are they useful? Because if you are going to do anything, if you have like, I'm a very visual person. I don't know about you guys, but for me, it's very important to visualize what it is for me to what it is that I'm trying to do here. So, for example, if we're going to come up with a strategy, for example, you want to illustrate what it is that you want to see. So if we are talking about the copper trade, for example, so what do we have? We had a weekly supply potential, right? And then you have, let's move this up so we can keep going through the mind maps. And then another thing was hitting ADR high and reversing. Ideally, that's what you want to see, right? So when something hits the average daily range, you want to see a price action reversal. So when you see that, immediately that's your non-discretionary way for trigger into a trade, right? And then obviously you have stop loss sizes, how far do you want to take it? But generally my first point of interest, if you will, would be if we're opening outside of value, it would be whether we're hitting the value. But today we have the initial balance outside of that whole area. So initial balance becomes the first thing that I want to see the price return to. So IB return, or return to IB, let's say. I'm a huge sort of mind map person. So, you know, I'm kind of like Sheldon, who has a thing for flow diagrams. I absolutely love visualizing things like that. And whenever I do this, in my head, everything is like super clear. But if you kind of keep all the strategies that you're supposed to be executing at quite high efficiency, if you keep them all up in your head, I find that you're never clear on what exactly you're seeing. And just by writing it down in this sort of visual form, really helps, not just me, but, you know, also, like I've worked with about 300 traders myself, like one-on-one, coaching them through my Go Coaching portal. And anytime I do something like this, to visualize the mistakes that might have been done and how we can improve them, it always clarifies everything, right? So, and actually yesterday I had somebody saying that they were getting confused. Is it a sustained auction? Is it a failed auction? Is it this? Is it that? And they kind of got themselves into a bit of a tizzy. Well, this, I don't know whether that person is watching, but if you are, you might consider going back to the mind maps, because they will clarify things for you. And if you don't have an unequivocal sort of signal for what is going on, then just don't trade it, you know, stay out. But the first point of trade success, as the trade life is happening, would be return to initial balance, obviously failed auction. And then you can decide whether you want to just stay out of it and, you know, take profit. So book profit, or whether you want to use this as an extended version, if you think there's legs for the trade to go further, which is not always the case, right? Sometimes I find that people are quite a bit hopeful, high on hopium, that they're going to catch these momentum trades every single day. So just keep in mind that if you look for big momentums, it's just not something that happens every day, and it's not realistic. It's just your greed. And somebody on Twitter told me, "Oh yeah, can you tell us how to take advantage of the type of days that we had on Wednesday on NQ, and just trade that and be happy, mate? You're gonna be trading 8% of the year then, because those sorts of days just don't come that often. Like literally, if you take the entire 12 months." Very big sort of zombie rallies that just keep going and keep going and keep going without any pullbacks, they happen at a rate of 8%. Like, is that how you want to live? Then don't be an intraday trader, be a swing trader, because that's what they do, right? You would sit on a trade forever, find a good area on a large time frame, get in and forget about it. That's what they mean by set and forget. But this is intraday trading. We need to learn how to take advantage of some smaller chunks on the market and not always be shooting for those home runs. And then again, yesterday in the chat, when I was on Fast Market, somebody said, "Oh, I'm surprised to see that Dee also scalps." Like, of course I'm going to scalp, but my scalps are like 30 to 50 ticks. They're not 5 or 10. That's the difference, right? So I always go for slightly bigger. Like yesterday, I I messed around with crude oil into the inventories in my live account, and then I decided to stop in the live, but then I carried on in the other in my, in the combine, and I got 2 great trades that were effectively scalps. I took like 40 ticks out of one of them, and I took another sort of 30 out of the fade into the euro close. So if you're using this sort of a process, that's what you're going to end up. Like, I'm not saying that psychology won't play into it still, because it definitely does. But at the same time, just by breaking things down into a mind map might be a way to clarify some things in your head, especially if you're really struggling. If you're doing well, you're doing well. Keep doing what's working, right? But most of you, I can imagine that you're watching some of these videos to learn stuff and see how you can get better. So this is the process that I've used on myself and on others to improve their trading skills. Okay, so continue trend down. Now, this is not like the end point, right? So from here on out, we then need to see some other orientation points that are going to help us in the decision of whether to continue the trend down. So you can go, the next point of contact is what happens at value high. So reverse or value acceptance. And we take that from the close of the 30-minute candle, because right now you're in a trade. You have to give it time to develop. So at this point, if you start messing around with 1-minute charts, it's not going to serve a purpose, and it's guaranteed to bounce you out of a trade. So you don't want that. You want to relax at this point. You have a trade that's in profit. Don't freak out. People tend to, like, if you've read Biggest Loser Wins by Tom Hugard, he says something very, very, like, I disagree on quite a few points with some of the stuff that he says, but I do agree on one big point, that people tend to freak out when their trade is in profit, and yet they remain hopeful when their trade is in a drawdown. So we need to flip that, right? So when your trade is doing well, it's already in profit, relax. Focus on a 30-minute chart, or at least a 15-minute chart. But I like to just scale out of the super tiny time frames, even though I have all of them peppered on my charts. And then I like to look at the 30-minute close around my orientation point. That's how I'm able to stay in longer term trades. And when I say longer term intraday, that means like 45 minutes. It doesn't mean, 2 days, 12 hours. Even though I am happily, keeping my trade on, that it's in a strong trend for like 2 to 4 hours. I've done that before. But again, it has to be a very good type of a market for that move. So now that this decision point, it's like, what do you want to do? Well, if it does close into the value acceptance, then you keep going to the next orientation point. But, once I see that my target has reached either an average session range low or something, because they tend to be different than the ADR high, that would be my end point. This is where I would finish my trade, and I would effectively just stop trading, right? So this for me would be change this to another color, however you do that. I would change that to some kind of a dark color and maybe a eclipse or something to signify that we reach the end of the line, right? Exit. And that's it. There's nothing else. Like, at that point, the entire life cycle is finished. However, you can also finish it up here for a smaller trade that doesn't do, or you don't think that it's at a larger time frame area where it has legs to keep going, right? All right, let's have a look at some more questions here because we're running out of time. Thomas Sabo says, I typically watch DAX and NQ during Euro hours, and I see a high correlation of momentum between DAX and NQ. Is this something you've seen studied? Yeah. This is a known thing. It is a correlation between equities. And in fact, I find that if you want to trade NQ, it's not a bad thing to keep an eye on DAX. I prefer trading DAX during the London session. So again, even though we don't have it yet on Topstep, but it is coming. Let's see what's going on here. So we are in a failed auction at the moment. So this could be a decent continuation move upside. But let me just see what we have on the very large time frames. Right, so you see, it's a very different outlook on the weekly chart, because there's like actually some volumes in this area, but still we have a low volume node that could be creating a new supply. That's not going to be known until another few days, so I can't really use that for any decisions. And then let's have a look at the granular level immediately. We're opening above London value, touching the London session high, and then failing the auction from there. So that's actually a pretty good high probability reversal. So I'm not going to be entering this in my private account. So failed auction in DAX. But yes, the correlation between the equities is very, very high. And you should definitely take note. And maybe even use it as a sort of a helper decision maker, if that makes sense. So yeah, it's interesting that during the London hours, DAX tends to be the decision maker. And then during the cash session, ES tends to be the one that drives the moves. And even like DAX moves a lot reasonable. I mean, not a lot, not like NQ or anything, but it keeps moving for the New York session as well. So you can trade it for New York too. Tekka is saying, are you looking for continuation movement? If we're talking copper, I would be looking for a rejection of the supply from the average daily range high. That will be the trade. So if we don't get that, it means that we have a trend turn at to a degree here. And then we're going to keep pushing, probably quite slowly, until there's some kind of a catalyst to push things along a little bit into this zone, and then turning away from these larger areas where the market showed some interest before and started this whole upward move. So again, nothing is decided in copper. This is all just speculative. This is not a signal service. Obviously, you need to make your own decisions. I can just give you, I always like to give pros and cons. So it's like, this is pro shorts, but this is against the shorts, right? So we are still in a very big downtrend. There's a good chance that we go into another short from this area, because, we had an extended move up. But there's also a good chance that this is an early trend turn. So you kind of keep pushing higher. And you just have to take both sides of the story, not be biased, and then just look for some market-generated information to show you the way. And the more of that market-generated information you have, the better it is. This is why I prefer to trade later in the day. So I prefer when we've already done like 2.5 hours, 3 hours of trading. We already pumped the initial balance. We have the idea of how strong or weak the auction is. It just becomes so much easier than kind of battling it out as soon as the market opens. You say lagging indicators and stuff like crossovers don't work, but intraday are SMA, EMA better used at reference points? No. So for my reference points, I still use market-generated information. I don't use lagging indicators for that purpose. However, I do use it for entry timing. So I have a 9 EMA and overnight VWAP on a 1-minute chart on equi volumes on Ninja, right? So those are, for me, timing tools. They're not levels to fall back on, even though there are people like David Green who very successfully use them as levels, but he also uses pivots. Now, pivots to me are more like the average daily ranges, right? Because that's what they're based on. You get certain areas that are pivots, support, and resistance that are calculated from those pivots, and that gives him the reference point that is market-generated information. So if you listen to him closely, he doesn't always say, I'm going to go short at 9 EMA. No, he goes, well, we are below 21 EMA, that's my directional indicator, and we've actually moved pretty far out from the 9 EMA, and now we're hitting a pivot point. So that's where his trade is. So he trades back to, almost like mean reversions back to those levels, from what I can tell. But again, you can ask him. So he has several ways to use the market-generated information and uses price action, right? So he has other things as well. But for me, that never worked for me, right? Like when I looked at the moving averages as a lagging indicator and as a level of interest, it was always messy. And then if you were in a range-bound day, people who trade that way, they were just like, oh, we're just chopping. We're not chopping, we're in a range. It's like, find the high, find the low, fade those. So I wanted to know how to position myself in almost any market state as an intraday trader so that I can find opportunities every day. Because, at that time, that was my only income. So, I had to, get better in all market states, not just, one. Because I traded as a swing trader for 5 years. Very much a one-sided way to trade. You're looking for reversals and you're riding momentums. That's it, right? When you get down to the intraday level, it's a whole different ball game. It's kind of like, shooting some basketball with your friends down the road, or signing up for, the Olympics, getting through qualifiers, getting better and better. It's the same activity, but a very different skill set, right? So we have to keep that in mind, that intraday trading is like the Olympics. You have to get very good. And any inconsistency that you have in your trading is going to smack you right across the face intraday, because it's so sensitive to the stop loss size you use, the number of trades that you do in a day, the levels that you're using, the time of day when you're initiating your trades. So again, if you're going to take anything from my lessons and from this class, is that time of day matters. If you don't have consistency over when you're looking for setups, what sort of stop loss size you should be using in the light of current market volatility and conditions, so that has to be scalable. And when you're taking profits, in what market state. So I have 2R multiples as a default, but if we're in a range-bound day with a slightly tighter range, I will take my profits at 1-to-1, VWAP, middle of the range, anything. That's my profit. So suddenly that changes, because we don't have a momentum. There's nothing to push it to 2R. So for me to just sit in a trade and not take the 30-40 ticks that the market has given me, that would be stupid. That's why statements like the person yesterday was, she's got great skills, but I didn't realize, why would she scalp? I didn't realize she scalps. It's like everybody scalps. We're all intraday. It's just how it is. So yeah, Amanda, for me, the lagging indicators don't work as levels, but they definitely work as timing tools with a couple of other things in the mix. Lazy Lion says, how do you determine the initial balance during the London session on gold? The same way that we determine any initial balance. So you take the start of the session, you take the first hour, that's your initial balance high, that's your initial balance low. Whatever happened there, that's it. Very simple. Do you think NQ and ES liquidity could die like Forex? Well, funny you asked that, because when I was first put on the prop desk back in 2013, a long time ago, they put me on ES desk because they had an opening there and there was a lot of equities traders. ES was moving 14 ticks in a day. And actually, no, they first put me on fixed income. And then I was just like, no, I'm not a spread trader. I want something that moves. And they're like, well, come, we have an opening at the equities desk. So they moved me. And I start analyzing ES. And the first thing that I always did is to see how much range it's got in a day. And it had 4 to 6 handles, which is literally 12 to 18 ticks. And I was like, well, I was looking for something that moves more. This doesn't move at all. And that carried on, guys. It carried on for many years. We had very, very tight ranges in NQ and ES. And then COVID came. So COVID breakout changed everything. And liquidity massively flooded back into the equities. I think it started trickling back somewhat in 2016, But even then, it was just very meh. So for a long time, I actually didn't have ES on my charts at all. And then I started trading it again during COVID. That's also when I heavily traded NQ. And it is also the time when crude oil was moving like crazy. But the reason why I went to NQ is because they suspended crude oil trading because futures went into negative. So for a few weeks, we couldn't actually trade that. So I was like, well, what the hell do I trade now? And then I thought to myself, well, let's have a look at equities. And they were moving so much. So it was very fun. And then it went a little bit overboard. So NQ got to a point where the liquidity was so plentiful, and it's still a thin market, right? Even when it was moving back then, it was still a thinner market. Like you wouldn't have 40, 100, 200 contracts per price. It was always like 4, 10, 15, 20, a lot thinner than ES, a lot thinner. And and then it started having this intra-candle jitteriness, which I was very bothered by, And as life goes, I also had a vaccine injury 2.5 years ago. And just looking at the charts became very difficult because I was light sensitive. And it just, that I couldn't do it. Like it was so exhausting to me to look at the NQ chart on any time frame because of that jittery movement. And I decided not to trade it. So it was more to do with me, the health conditions that I had and still have, but I'm getting better. Just not like I couldn't look at the chart. Let's just put it that way. So I decided not to trade it at all. And then recently, right after this liquidity poll, I looked at it again. It's nowhere near as nervous now. So if you look at the NQ on a 30-minute chart now, whoopsie, hold on, let me just delete that. So if you look at it now, it's quite zen-like, right? It's like it's not moving. Like it moves a little bit more now in the cash session for New York, but it's nowhere near as nervous. So I think it's actually more acceptable now. So whatever they've done to it is definitely changed its behavior. And this slightly reduced liquidity, which is still massive, by the way, it might actually stay. It might stay until after the elections. It might stay into the next year. So even though we'll still get very nice trends on some days, I don't expect NQ to go super crazy like we've seen it go for the last sort of 2 years. So just be a little bit careful with market states and all that. And so one market is the most liquid during the London session. DAX. DAX is very liquid. This is why I've been pushing Michael to bring us DAX, because that is its main session, right? So DAX trades on Eurex and London Stock Exchange. That's it, right? Volumes drop off dramatically after that. Is the initial balance always recognized as the first hour of session opening? Well, it depends who you ask. So for some people, they say the first 30 minutes is sufficient. I disagree. I'm just going to clear my throat. 1 second. Depends who you ask. So for some people, they're like, well, 30 minutes is enough for the volatility for the craziness of the first hour to die out for the New York session. But then empirically, every time I try to get involved in those sorts of moves, because I'm not a core scalper, and because at that time of the day I do look for bigger reversals, I disagree. So I think the first hour of trading is still very important. You can do strategies like maybe looking at the movement in one direction and then maybe fading that movement. That's something that happens in gold and crude oil all the time. The first half an hour goes one way, the next half an hour goes the other way. And you still have days when it will push in the same direction. But then again, it's more likely that you get a failed auction in the third 30-minute period right after the initial balance. So yeah. Nomadic Canadian, what's your thoughts on 10 micros versus 1 mini? If you're going to trade 10 micros, That's okay if you're trying to scale out of a position or something. But if you're going to be doing what the guy yesterday was doing, like he's profitable, but like Jack said, to put things in perspective, that the amount of contracts that he's traded, if that was, I don't know whether it was live, but he would have single-handedly accounted for 1% of transacted volume in the micros. That's not a good thing, okay? That's like terrible. So if you're going to be doing that, trading 100 micros, 150 micros, just don't do it, man. Like I know that in Topstep on the combines, in XFAs, we don't have commissions, but we still have commissions on micros in the live. So that's not going to work at all. Like all of your profits at times of drawdowns when you're not doing that well. I'm always looking at things from the worst case scenario. So if you're not doing well, what are those commissions going to do for your profits? They're going to eat into them. So even if you have a little bit of profit, you're still going to be sitting on $500-600 of commission on the day. So it's a very, very slippery slope to play. And so micros have their place. But for me, every time I need to go over 6 micros, for whatever reason, I just default back to minis. One good use for micros, let me finish with this, is that now instead of, how people are like, when you're scaling up, you go from 1 mini to 2. Well, no, why would you do that? You can have, like we have in Ninja, we have Replicanto that replicates things in a very interesting way where you can size the other accounts differently, or you can even size the same account on a different product. So instead of going from 1 to 2, which is 100% increases in your position size, that usually messes up people and makes them blow accounts in 3.5 minutes. You would be better off sizing up by going 1 mini and then 3 micros on the same product. So same position, same everything, but you're effectively in 1.3 position size lots rather than 1 to 2. So that's something that I've been doing with some of my students. And that's a better way to look at the micros as a vehicle of like using micros to not size up like a lunatic immediately, but just take it in small chunks. And it makes compounding actually very possible in futures, which was before only possible if you had, 6-figure account and then you're trading multiple contracts anyways. And then you could kind of compound with full contracts. But micros have changed the game when it comes to that. And that's the way I would utilize them. If I'm scaling up, I would be doing effectively 1.3, 1.5, 1.7. And then only once your account size grows to enough buffer to go to 2, that's when you go to 2. It's much less painful. All right, guys, that is it. We're going to be ending this session now. I'm going to have a big sort of rest today because I do have Marcus Talking with Dee very late in the day. So join me for that. It's going to be 1 p.m. Central, which is 7 p.m. in my time. And until then, make sure to check out the hotkeys on the DOM. So in order to enable hotkeys, you need to click on that gold H. There are a couple of new hotkeys that they've created. So they now have contract size +1, contract size -1. So you can set those hotkeys there. You can set all the others that were there, but they added an extra thing to increase or decrease contract size. Again, make sure to test this in a simulated demo environment where things don't matter, you don't have skin in the game and all of that. And of course, I have to mention some new programming that we have. So we have the standard Dakota 7:30 p.m. slow markets. That's now a legendary class at this point. Then we have At the Buzzer, which with Coach Jay. Every day is a market recap from 3:15 p.m. Central. Literally right after we close the main broadcast, Coach Jay goes on. And we finally have Nick for a tick doing his Sundays Globex Open. He's a cool dude. I love bantering with him. He's an awesome trader. Lots to learn from him. Very level-headed, very funny. And yeah, so check him out. That's on Sundays at 4:45 p.m. Central. Enjoy. I will see you guys next week because this is my last day of doing the London session, Monday through Thursday, every day from 3:30 a.m. Central or 9:30 a.m. London time. Thank you for joining me. Make sure to click the like button. I always forget the audience interaction. Sorry about that. But yeah, make sure to click the like if you're finding things useful here, and subscribe to the channel if you're not already subscribed. I will see you next week. Take care.